All right. Good afternoon. I told you we'd be back. Sorry, it's a new program we're trying out. Thank you, everyone, for being patient with us through this. Just a little minor hiccup there, just getting adjusted. For some reason, we ended up getting over. And I know you're all probably doing the math. Where did it happen? So I have a really good suspicion it was with the regulations. It was my fault there. So thank you for bearing with us. Now, you've heard, we've gone through the regulations. We've gone through the stats. We've heard from an entrepreneur. Now you're going to hear about the people that really make it happen. And I have no quarrels about this. I don't have any disregard for the funding portals or the broker dealers. What they do is extremely important. But make no mistake, all the pressure is on this group. This is the group that actually brings that awareness, creates the story and all that, the passion. Meet the investor acquisition team. Jason, the floor is yours.
Excellent. Thanks for that introduction there, Oscar. That definitely sets the stage. Those are the conversations that we're in. And I'll let the other panelists speak for themselves as well. But on a daily basis, my name is Jason Fishman. I run an agency called DNA out of Los Angeles, California. We've worked on 200 equity crowdfunding campaigns to date, collectively have raised 9 figures of capital. Everything that I talk about today will be based on insights from those experiences, and want to go over the questions, the thought processes that we get from entrepreneurs, from founders, from the dreamers, and be able to dive in there with recommendations. Excited about the panel today. Scott, Richard, first time being, Richard, we had a great panel about a month ago. That's Andrew, right. I think we're doing this on a regular basis at this point. Excited to be on with you.
My wife's already jealous.
Well said. Andrew, you want to kick things off, talk about your background, and Scott, Richard will take it from there?
Yeah, I don't know why you picked me to do it, knowing what a pain in the neck I am. So I'm Andrew Korn. I think this is my first time ever on a KoreSummit, so I'm very pleased to be here. I am the founder and chief strategist at E5A. We are a systematic, data-driven investor acquisition firm. We've been involved in a little more than $2 billion supporting those raises, Reg D, Reg A+, and also exchange-traded products. And I'm a former portfolio manager, multi-factor model guy. I've also been chief marketing officer of 2 public companies and run an agency prior to this. So anyway, very glad to be here, but notice I use the word support. Only broker dealers and platforms raise money. What our job, everyone on this panel, our job is to figure out who you want to market to, convince them to come and visit your offering page, to click Oscar's invest button, and then to complete their investment. But we have nothing to do with raising money. That is only done by broker dealers and by platforms. And if Sarah's listening in, hopefully she's very proud of my saying that. Sarah Hanks, the attorney I'm talking about there.
Excellent. And exactly, I like to give all credit to the founders at that too. We're working on their behalf. And as you said, Andrew, portals, broker dealers. Scott, want to welcome yourself to the audience? Tell them a bit about your background.
Sure. Happy to be here. Andrew and I have been on a panel before on a previous KoreSummit. Listen, I got to say, Andrew jokes about being his first KoreSummit. I got to tell you, a whole lot of what I learned about IA, I learned about from watching every single panel that Andrew Korn has done on the KoreSummits going back a while. My background, I started my first business while I was in college and have been in and around the healthcare space a lot of my career, a very zigzag career with a few bumps in the road and a few loop-de-loops. And in the 2000s, I worked with a company called Public Company Management Corporation with a friend and colleague, Stephen Brock, and got in the security space then and worked with quite a few of those companies. Reconnected with Stephen a year and a half ago and getting into this space and really being able to do a lot of the things with Reg A that we were unable to do with over-the-counter markets in the 2000s. So really excited about this space and have really focused in on doing a very focused offering in the healthcare space. We've got an active raise going and a couple of more that are in the prep phase. Large mid-figure, mid 8-figure raises that we're preparing for. And I'm with Uhuru Network. I had built my own agency as CEO and was quickly outrunning myself and found someone who could bring some additional resources to it. So I did. I had my exit strategy and got actually acquired by Uhuru Network, which is where I'm running the investor acquisition program now.
Very nice. Very nice. And Richard, want to give a bit about your background for listeners before we dive into the topics?
Sure. Thanks, Jason. I'm Richard Heft. I'm co-founder and president of EXT Marketing, which was founded over 12 years ago. As anybody who knows me knows, I have an extensive history in financial services, communications, and marketing. That is really my background. But our company, EXT Digital, has been around for about 5 years. We offer pay-per-click services using native ads to target retail investors through our private marketplace. We also have an offering that disseminates our clients' news through financial influencers or finfluencers across a number of platforms like, say, the TikToks and Twitters and Facebooks, etc. So that's pretty much the 30-second elevator pitch about me, and I just want to thank Oscar and the rest of the KoreConnect team for inviting me to attend this great event. Great to see all of you other panelists.
Absolutely. And again, Richard, excited to be on the panel with you again. There was different speakers switching out. It was a delight to see you sitting here. And also want to applaud Oscar and the entire KoreConnect team for putting these events together, putting the community, at these milestones to see a higher success rate industry wide. And
Jason, I've never thought of myself as that forgettable. And, 1 month later and I'm already out of the picture.
Not at all. Not at all. I'm on a smaller device today. Actually at a client's office traveling for a conference. So you're on a small thumbnail, but no, excited about it. And you brought a lot of great stories to the table last time. So looking forward to seeing where the chat could go today. And for everyone who's tuning in, you've seen all of these panels, as Oscar was saying, about your setup. We're now going to talk about the investor acquisition, but want to begin with the question, what is that? What is investor acquisition? How does it take place? Yes, everyone wants to bring, different individuals into the filing, But how does it actually take place, and where does planning begin? Open question.
Well, I'm glad to jump in on what the definition of investor acquisition is. It is a phrase that I came up with about a year and a half ago and was pushing Oscar to switch from calling it marketing to this. We are a very focused acquisition company, and a lot of people, when they're doing marketing and advertising, they talk about brand and building trust, and those are all things that are part of investor acquisition. But we are essentially measured by how much money we raise. And at the end of the day, you can look at every KPI possible, and how people are measuring success. But it all comes down to how much money has been raised. If an offering, we focus generally on larger raises. We're doing some 75s and some 50s now, and a couple of smaller ones. But anyway, if someone's doing 50 and we raise 45, that is not fulfilling the mission. So essentially, you need to look at what will the median be and how much you're raising, how many investors does that take to get there. Is the field of prospective investors big enough to fill that and then fill it? So basically, investor acquisition is making sure that the register is rung, that someone signs and completes their application to be an investor and funds it. And what we assure people is that, hey, if someone does that, they probably have a very high view of your brand as well. So that's where we kind of say brand takes a slight backseat, because there's a very specific goal and in a very specific time frame as well. Generally, brand advertising has a lot more runway than we do.
Excellent. And I just got note that Andy Angelos is also here. I think Richard and Andy's pictures were jumping off for me. So Andy, you want to give a bit of background there as well? Sorry to skip you, and talk about how you guys set up investor acquisition campaigns, where the planning begins, some of the questions you guys get asked on a daily basis from prospective issuers.
Yeah, sure. I'm happy to jump in. I just I should have used Andrew, and then I could have had two confusions with Andrew and Richard too. So
there you go.
Anyway, I'm with Forward Progress. So the company, we're a marketing agency. We've been around for 20 years. Prior to the past few, when we've gone really into Reg D, Reg CF, Reg A plus, we were still in the finance world, but we were mainly working for banks, so community banks, doing loan origination and other things, but from the marketing perspective. So a lot of those tools and strategies and tips kind of transferred into that. I've been running agencies of varying sorts in Chicago for the past 10 years, everything from content to data plays to now this. But anyway, that's the short bio. In reference to your question about what people want to know beforehand, I think one of the biggest questions is people want to put us on the spot for what things cost. So that's kind of the first question that you get before you even know a lot about the company is, well, what's all this going to cost? And there are many variables that can go into that. The main one is kind of what is the company starting with from the beginning. So doing this as a cold start, I think, and our experience has been, it's incredibly difficult and challenging. So anything you can do from a customer acquisition or a testing the waters or building up a community of people that are aware, so then your remarketing when a campaign or an offering goes live is going to, definitely decrease the what you have. So that's the first question that I like to start with, or talking through, is like, well, what are you doing today to prepare for the eventual capital raise?
Excellent. Great answers, both of you. But by the way, Andrew, I was looking through a booth build out we had in 2018, and it said scalable investor acquisition. And it was for a conference in Thailand for digital assets. So I thought back, I was trying to remember where the investor acquisition terms come from. But I know you have built the whole thing within this community and for Reg A plus campaigns. And again, the insights are I think, very well received by the audience. Scott, Richard, when you guys get asked about your investor acquisition process, how do you describe it? Where does it begin?
Yeah. Oh, sorry, Scott. For us, it's really about, what the client's objectives are, how well built out. I think it was Andy who mentioned brand, the messaging, what their targets are, who their target investors are, and for us, it's all that front end work that goes into creating a campaign and the lead funnels and all the rest. But it really starts with where are they positioned in the marketplace, who are they targeting, what types of lead funnels can we create, retail accredited, because most of the clients that come to us are targeting sort of often the smaller retail investors, and then how we're gonna get their ads and their message in front of the right investors. So we do a lot of key messaging and branding to ensure that we know what the competitive environment looks like, what the target investor looks like. We'll create personas and all that type of stuff. That's really the first stages. But of course, there's the price, there's the metrics and KPIs and all of those things that the client always asks us first about. And we try to give them as much information as possible without being over promiscuous and that type of thing.
I think I'd just add that our approach is a lot kind of what Richard just described. The big thing for us is that it really depends on the stage of the business. An established business that already has customers in a pipeline and website and funnels for that is in a completely different situation than a lot of the clients that we deal with who are in the healthcare space and very often pre-revenue. And very often they have a website that was put up by an intern or by a relative of the founders. And so a lot of times we actually have to kind of work both, at least to some degree, even though they're not attracting clients right now. We actually have to think in terms of the web design in terms of serving those different constituencies of potential future customers and having a website that is also built for that possibility, as well as then creating a unique track and messaging for investor acquisition. And in particular, when you're talking about these pre-revenue companies, you actually have to do a lot of the brand building, because just driving a campaign out of nowhere, the retail investors' due diligence is going to consist of a Google search, and they want to see social proof that that this company is out there and find some additional story, et cetera. So we do tie in PR actually even prior to the launch of getting some exposure out there, so that there is some that social proof at the time of launch for that retail investor due diligence.
And social proof is such a great point to bring up. I know when we're getting into these campaigns, we start with strategy, we map out the audiences, the channels we want to use, the creative, want to emphasize the projections, the numbers we're looking to produce. But the biggest variable in the projections is the conversion rate. The biggest thing we can do to increase the conversion rate in many cases is showcase more social proof, more third-party validation that this is going to happen. This is a moving vehicle. How do you guys go about generating that type of endorsement? How do you guys build social proof, whether we're talking about publishers, different investment groups, investment email newsletters, or anyone that's industry specific saying, hey, these guys, they're disruptive. What they're doing is going to be big. How do you produce that?
From our, at our company, I sort of spoke earlier about the financial influencers. So we've spent a lot of time building a proprietary network of influencers with very engaged followers. They tend to act in relatively large numbers accordingly to what these influencers are telling them. So, they'll seed something like, check out what's going on in the cannabis space in Canada. And then, we'll set up the landing page and really try to optimize the news that these financial influencers are disseminating. We found that could be a very powerful way to get a message out and to build credibility.
Yeah, for us being in the healthcare space, a big thing for us is identifying what the specialties are that are related to whatever the pharmaceutical or medical device product is. So, so let's say it's a cardiology related device. Then what we're going to do is we're going to identify that segment and all the different places that we can identify and target that segment in sort of your usual channels, targeting that way, and doing also some direct outreach, email, etc. A big thing for us also, though, is actually going to the professional associations and nonprofit associations and trade journals in that space. So again, you're going to go to the American Heart Association, we can go and advertise directly there. We can advertise directly in their journal. We can also go on Facebook and we can find people who like the American Heart Association, those kinds of things. And so that's a really big part, is doing that outreach and again, looking for to create some content in that space and in those channels before the launch. I think, again, we're talking about, and this is one of the things I'd love to see actually all of us be able to come together. We all know that higher brand awareness and higher brand quality and brand reputation drives higher return on ad spend. and every single person here, we all know that. I'd love to actually have the data to really back that up on a large scale, particularly in this space. So
we could share some numbers with you, Scott. After this, we could work on a study together, measuring the awareness, how that means predictions for existing audience, the traffic, the conversions. I think that's a great thing to collaborate on and be able to provide those insights.
Yeah, I think that every deal is different when it comes to conversions. Advertising is broken down into two categories: reach and frequency. So actually earlier today, someone said, oh, look, in the science category within Reddit, there's 30 million people interested in science. And it's like, okay, well, that's a place we don't want to go. And everyone's like, well, 30 million people, that's a huge audience. Why wouldn't you want to be there? Well, the average person needs to see the message 8 times before they will click on it. And source on that is the American Association of Advertising Agencies, which has been a client of ours. And anyway, I'm not going to get 8 ad impressions against 30 million people very quickly without spending an awful lot of money. So, we have to be much more narrow than that. So it comes down to, and everyone's saying it just slightly different ways, comes down to affinity and data. So, when Scott says, oh, I'm going to go to the American Heart Association, that's great to get within industry or kind of trade verification. And that's a real good social proof point, to use some other people's language. For us, it's how much of that do we need and how much of that is too much. We don't particularly speak to the press directly. I was kind of a shameless self-promoter as an equity portfolio manager. I'm sure shocking to everyone here. And also I was chief marketing officer of a financial news company. So I know a lot of reporters, but we bring in a PR firm, and the PR firm differs by deal based on what the needs of the client is. And same thing in social media, which it might be the PR firm or it might be a separate company. There are several we really like to work with, but then it's a question of what is their goal? Because once we get those proof points, what are they going to do next? Or do we not need them anymore? So we need to look at that and see what's the ROI on that. One of the things I said earlier, unlike a normal campaign, you're doing a Reg A plus from the day you go live, you have 12 months. You don't have a 13-month. You can't extend. You can do another Reg A plus or extend your Reg A plus for another year, but again, that is not fulfilling your obligation. So we look at each of these as how do they contribute to that data and affinity, and then make sure that we are heading to the right goal.
Andy, anything to add to that?
Yeah, I mean, I think I agree with parts of what everyone's saying. I think once you figure out that the narrow casting, that small audience that you need to get the impressions with so your conversion can be optimal, I think it's good to be as omnipresent as possible in that world. So people see news, they see milestones, they see traction, they see advertising. And from the end user, the prospective investor, regardless of how big or what's actually happening with the company, it gives them a sense that there's a lot of momentum and then creates an urge to act. So that's an approach, whether it's capital raising or any type of or investor acquisition or any type of marketing. I think that's a good strategy to take. So I agree with what everyone's saying, and we've had a lot of success in the influencer space as well, specifically with early stage campaigns where the company doesn't have, doesn't have a lot of equity or brand trust built up. If we get someone that does have that trust with their audience to give an endorsement, we can really ride that to a level where we actually do have the credibility that we need. So that's been a tactic that we've used in these, a company that's really doing a true cold start. They're starting from zero with a first raise.
And I just want to interject. Everyone on here has a very different job than if someone's on one of the big portals. Someone will say, oh, well, we raised $1 million in a CF on Seed Invest or Start Engine or whatever. And I'm like, well, yeah, so you did something really small. That doesn't mean it's going to scale. They generally, I refer to it as the candy store thing. They can run a candy store. Doesn't mean they can do my job. Once you're raising a lot of money, you need a firm like mine or a firm like all the people who are on this panel who all do a really good job. So taking that and scaling that so that you're having 10,000 investors, 20,000 investors, think of the median on that at 50 or 75 million. You're talking about thousands of people converting and not just clicking an invest button, but signing and completing and sending their money in. So it is a much, much, much different job than someone doing a CF.
Yeah, I'd like to hop in on that, and that's Andy. That's something you and I have discussed before, but I think that's a great point. That you might actually be able to raise $5 million off of one email list and a Facebook campaign. You're not going to raise $50 million off of that. You are talking multi-channel. Even you're talking multi-channel and then multi-sub channels. You're not going to get it off of one email list. You're not going to get it off of one social media platform. You're going to need to find other, we all have our usual suspects where we're always going to go and run something on Facebook or, wherever else that, some of these other pretty proven general channels. But every one of them, there's going to be some channel that's going to be unique to that offering that you're going to go ahead and have to be finding. And if it's, you maybe have to look at content promotion on, Taboola or Outbrain or whatever. You've got to look across all of these different channels. And I think that's a big thing. And the other thing I'd say also with it is that, to your point about that these may not be immediate buys and that this is a long-term thing, you've also got to have the tracking in there. The tracking and marketing automation or whatever you want to call it to do the follow-ups for the retargeting and abandoned carts and all the other things that we can do with digital marketing to sustain the relationship and get them back in. And that's, again, something you're not going to typically get in a portal or on a DIY raise, tying in HubSpot or Salesforce, whatever you're talking about doing to drive that piece of it.
It is all in that follow-up. Oh, it was all in the follow-up. As Andrew said, eighth time that you reach a prospective investor. As Richard was talking about funnels, it is all in that lower funnel marketing.
The only thing I was going to add is it's also about, and this is where we've had a lot of success, is optimizing the landing page, optimizing the different ads and being agile and course correcting where when you're on one of the platforms or when your content isn't hitting the mark, all things being equal, you can update the content, you can update the platforms, you can update how you're activating the ads and all of this is available through A/B testing. So it's the old ways. You don't have to look at these things the old ways anymore, where if something isn't working, it may not be working over the long term. You can test and repeat, or test and update, have a lot, maybe the brand key messaging, you have to adjust it. We're doing a bit of research right now ourselves on industry best practice for user experience for retail investors, where they're going online, what they want to see, what's grabbing their attention. We have found there's been inadequate research in that area, and we want to see where people are going, as well as divvying up sort of the retail investors versus accredited investors and those types of things.
Yeah, I think that's such a great point. And one of the questions we get from clients sometimes is, well, why can't we front load this? Why can't we go and start spending $100,000, $200,000, $300,000 a month in ads in those first couple of months and blow it out of the water up front? And I just sit there and think about a couple examples we've had recently. I mean, we've had a client where we made a 700% improvement in their campaign. It took us 2 months of checking it every week to get that.
Yeah.
But we got to a 700% improvement in the campaign. We had another client just had their call with them today, and we had a 30% improvement in their campaign just by swapping out the images and making one little tweak to their images. And so when you're talking about, don't you want to do that when you're spending 10, 20, 30,000 a month total and trying that out across, 3 or 4 different channels, not with you don't experiment at that level. And that's, I think, a thing a lot of people don't realize is that experimentation is required. Doesn't mean you didn't know what you were doing when you put out the first version. It means, and I think that's something we need to all take, from an expectation setting standpoint, is that we've got to set the expectations for that with the clients from really before we even sign them up.
Absolutely. Couldn't agree with you more. There's assumptions going into a campaign, but you need the data to prove, hey, these channels, these audiences, this messaging, that's where we're getting the highest conversion rate. And as Andrew was saying, each deal is different. We're going to see different performance on each of these. Everyone on this panel is great at what they do. If an issuer is listening to us trying to plan out their campaign, I want to make sure we're not painting too pretty of a picture. Not every campaign hits its goals. There are inherent obstacles with fundraising as well as marketing. What are some of the obstacles that they should prepare for? What are some of the indicators of potential success? And how can groups prepare for their raise accordingly?
If no one else wants to, I will. So seasonality is actually an enormous driver. We try to stay on top of holidays and school vacations and things that are going to distract people. I believe recently there was a global pandemic, which made things really difficult and then made things really easy. And now that the pendulum is swinging the other way, there's challenges. We only take clients in 3 different categories, which are yield products, innovation, and ESG. And frequently we look for things that are 2 or 3 of those categories. And then we vet our companies. I'm a former portfolio manager, so we want to make sure, and we're capacity constrained. We won't take more than X number of clients at a time. So, we're very careful of who we're working with to make sure they're extremely high probability. None of that ensures success. We have a wonderful client with an amazing product that is in market, and we are shut down by Facebook. And getting past that Facebook ban is a real problem. And it's taken us longer than we've wanted. I'm probably going to drive out and shake Mark Zuckerberg personally. And, and that's part of, and I know everyone else on the panel will do whatever it takes to get by that. But there are bizarro things. We had Google shut down, just one of the 8 campaigns we were running within Google. And then bam, it came back on its own. It wasn't even our Google rep. So there are all sorts of bumps in the road that happen. Or press gets something wrong, which hasn't happened to us, but I do see that happening. So I think each of us would have our own different battle scars from what has happened during the course of campaigns.
I think, and I agree with everything Andrew just said. Given that this is a discussion about the entrepreneurs, I can tell you that the entrepreneurs we've worked with are all leaders in their respective spaces with long-term experience, knowledge, smartest people on the planet, so passionate. They understand the competitive environment. They've obviously done a lot of that background work. They've identified a problem or need that they're hoping to solve or address. But I think you said it, Jason. Sometimes there are unrealistic expectations. Sometimes they don't fully understand who they're targeting in terms of investor profile. Sometimes their brand isn't fully aligned with the product, which makes messaging and advertising and getting it out there a little more challenging. So for us, it's about identifying these areas where we can improve the brand, strengthen the brand, create a brand that resonates with an investor audience, a message that should resonate, platforms where our work on building personas tells us these investors will be congregating so we can get the highest amount of impact, best metrics possible. But it's sometimes there's a misalignment, and we try to bridge that gap wherever possible. But entrepreneurs know what they want, and you have to work within those parameters as well.
I wanted to go ahead. Sorry.
Okay, I was just gonna say, I think platform issues is one of the biggest things that can just hit you like like a train wreck. I mean, there's 3 examples I can think of. I mean, most recently, in the past, we've seen Facebook advertising go up maybe 30 to 50% at holiday season. This year, it doubled. This year we saw, and the whole inventory. So it doesn't matter that you're advertising for investor acquisition for some niche product. The whole inventory goes up in price when you're on a general platform like that. And, it takes you a week to see it. And all of a sudden, all of your metrics drop by 50% because you've set a budget and everything, dies in a week. Of course, the privacy issues with iOS and Facebook, and that basically just decimated our targeting ability on Facebook. I mean, there's workarounds, and we've all been figuring those out, but it fundamentally changed the way that we target on Facebook. LinkedIn this year, if you were running an aggressive LinkedIn campaign, then one day they just basically came along and cut your ability there by about 80%. And so so if you had a great LinkedIn campaign going and all of a sudden, your results there drop by 80%, we have to find workarounds, but those kinds of things can just kill a channel overnight.
And we're coming up on the last 3.5 minutes here. Andy, I know you wanted to add something. I figured we can all throw in a final note, final thought,
Sure.
Final recommendation to founders.
Yeah, I was just going to close the loop on that last conversation with a hurdle that I see very commonly is patience. And I think that was a common thread in what everyone was saying, is that things are going to go wrong. That's a guarantee. That's a truth in these campaigns. And having the stomach to kind of wait through that. So I think Scott's example was waiting 2 months to kind of turn the campaign around. And then Andrew talking about having a Facebook account that's just disabled, which we've all had, but having the patience to not completely, change course and do something that might be erratic or damage the campaign in the moment because you need to hit certain milestones, I think is a challenge that we all face. Is like, when do you course correct, or when do you try to push through those things? So that's just about relationship and transparency with the entrepreneur and our firms. So I think that's the most common hurdle that I foresee in broad terms.
I echo that. And any final thoughts, any final recommendations from panelists in the last couple minutes here for the entrepreneurs listening in?
I will toss something out which is referred to as first-party data. We spend enormous amounts of time and money building essentially proprietary lists of angel investors, of tech investors, of people seeking yield, of people seeking tech investments. And we do that because with first-party data, you don't have to worry about targeting in Facebook or targeting in Google or anything else. You're building your own data and starting with your own data. Doesn't mean it's going to be perfect, but it does overcome a lot of hurdles. Someone like Scott, who's focused on medical, you can just continuously build medical, but even within that, what happens for the American Heart Association is different than diabetes, that's different than an orphan disease. So, there's so many sub niches of this, but it has really been something great for us and for our clients, and thought it was something that I should bring to the forefront.
I was just going to throw in that although I did talk about spending a lot of time optimizing, a lot of effort, optimizing campaigns to get the best results, consistency does tend to be key. In our industry, ad content creation should be about 1/3 of your effort, the ad buy about 2/3 on budget. issuers need to understand the importance of that content. They don't want to take a shotgun approach. Of course, being a content person like I am, I always start with the content and then look at the ad buy and the other sort of efforts. So that would be my sort of closing thoughts.
Excellent. Yes, the first party audience data has been huge for us. Anyone listening in, my recommendation is get in contact with everyone on this panel. Build a relationship with Andrew. Contact Andy, who just hopped off, Scott, Richard. They're going to be able to give you insights that don't show up in textbooks. They're not online. Legal, other groups who work in the vertical could give you little hints of it, but these are the experts who are firsthand working on these campaigns on a daily basis. I invite anyone to get in contact with me for a more marketing chat as well too. But I would definitely pick everyone's brain here and find out how they can work on your campaign. Don't sell your brand short. Give it all the resources you can towards success and the timeline that you need.
That's perfect, guys. That was amazing. Thank you, Jason, Scott, Andrew, Andy. I know he had to leave, but I think that was a great closing, Jason, because it is true. All of you people go, well, they're competitors. They're not. They all work together. Each of them, you heard, that's why you're hearing different dynamics of the discussion. We're evolving as an ecosystem, and we want you to be successful. In order to be successful, let's not forget the first word, crowdfunding. And crowd is not just the crowd, it's everyone involved. If your lawyer's not willing to step up and be part of that execution, or your auditor or anyone else involved, then it's time for you to start looking somewhere else to bring this to happen. So thank you, everyone. Really appreciate this afternoon. We'll be closing this session and starting the next one right away. Thank you.